So, hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you are, whatever you may be doing. 1st of July 2018. Welcome to the second half of the year. Hope everybody's ready. So, we should get a pretty interesting open, seeing what would happen, all the news we got over the weekend, especially with Trump. But again, we're going to try and focus on the technicals here. We're going to go into what's a little bit of a funky holiday week, kind of. We got 4th of July on Wednesday, half day trading on Tuesday. So some people will be taking the first part of the week off. Some people will be taking the second half of the week off. Some people will be taking the whole week off. We'll have to wait and see what happens. I mean, we do have interesting data points, a lot of interesting data points out of the UK. We got the RBA, but again, the focus, Carney speaking, but the real focus is going to be at the end of the week when we get into non-farm payrolls. So that's going to be what we'll be focused on. Now, I suspect most people will be going into this new month looking at the SPX chart saying, well, look at how we closed. We had a fairly interesting rejection off that 2800 level, and that's what most people are going to be focused on. As far as we're concerned, not an awful lot has changed, right? Our base case played out quite nicely. So our base case was, if you look at the ES, we said going into last week, the way the markets were trading, the way the action was shaping up, our base case was that we were going to see a test of the 2700. Remember, we wanted to see 2700 on the ES, 24,000 on the YM, and 7,000 on the NASDAQ. So here this played out quite nicely. Heavy back tested. It bounced exactly where we'd expect it to bounce. So here it's bouncing in a healthy manner. Our base case is still that, especially going into the summer months, this is going to be sell the rally. Unless we trade back above the 2800 from a closing basis on a day close or a weekly close, our base case is still that we have to probe lower, and that means below the 2700. If we can get some traction, it could get very funky, and yearly lows will likely get tested. If you look at the YM and NQ, so let's just go through these quickly. NQ, our base case was that the 7,000 was going to get tested, and here again, any rally that can't close above 72.14, so our base case is still that we're going to have to probe lower, and that we're going to try and test underneath the 6,800. I mean, you can see here, if you flip some moving averages on here, how technical this is that it's come back in, and this 5100 is trying to hold it. So as long as this holds, it looks for bounce. We break below, then the 200 is going to be attracting. Now you can see that dynamic, which I didn't show you, but we can go back to it on the ES with the moving averages, and you see trying to bounce here right at those two moving averages. Very heavy action. As long as it can hold, this is bounce territory, but break below, we expect it to be heavy. And because the 200 is so close, and the 200 to us is not that interesting when it's been touched so many times recently, we'd expect, like the YM, for it to go knife through butter if we get that test. And going into the YM, since we're talking about the YM, again, we got that 24,000 tested, holding very heavy, still below the 200. Day closes below, this gets very ugly. Our base case is still that those yearly lows still have to get tested. Now, keep in mind that we've seen something which we haven't seen for an awful long time. You can go back and look at your charts, but we had 3 negative weeks in a row on the YM. It's been years since we had that. So again, the action is fairly bearish, and especially as we go into the summer months, we'd expect markets to continue to be traded a little bit heavy. Now, the other chart which we feel we posted on the blog and we posted on Twitter, which you really have to have up on your charts here on your screens, is the gold. Now, gold, there are two seasonal patterns that we like on gold. Actually, before, let me just clear the chart up. What we said is that if this was going to bounce, this was going to be an interesting place for it to find a bid into the 1250 zone, and it's trying to hold. Now, there's two seasonal patterns which we particularly like to focus on and try and take advantage of in gold, and basically it's the buying and looking for buys in December for January, February ramp, and looking for buys in late June, start of July for August, September ramp. Now keep in mind that August, September on gold is the best 2-month seasonal pattern after the January, Feb. So it makes sense to look at it. Now it doesn't mean it has to go up. It doesn't mean you have to trade it to the long side, but it's just something that you want to keep in mind. So here our base case is that it's going to try and bounce around this zone. And if it can catch a little bit of a bid, it could make its way all the way back into these 1300s. Previous support will likely act as resistance as an intermediate bull bear line, but this stays heavy unless we close back above the 1300. If we close back above the 1300, then we expect this could really squeeze very, very aggressively. Now, having talked about those two, we'd have to talk about the DXY. And what's happening on the DXY, and again, we could get a little bit of a funky open tonight on the DXY, but we're just going to look at the levels. And our base case is still that's stuck in a range, right? It's stuck in a range, and we tweeted it out. We talked about it on the blog. We said, you can't get bullish here. You can't get bullish until that breakout is confirmed. And so as far as we're concerned, this is still what we're focused on. So unless we get a good, strong close above these 95.19s, our base case is still that all these lows could get tested very quickly, and we could easily see it move back into more neutral territory. Now the chart is bullish, and it continues to try to rotate higher, so it doesn't mean it can't go higher. But if we're looking for at current ranges, we're looking at asymmetries, we're looking at places to try and be tactical, clearly for us into the 95 20s, if you want to call it, that was short opportunity. And looking at that, you got a couple of chances across the board. I mean, you got the usual Polos gift from the gods, and you see here we completed this symmetrical move, 3 steps, and we said, I think we tweeted this out, we posted on the blog, we were talking about this in the weekly webinars, we said, if this is going to stall on this break up, which was very, very, this is being bullish for a long time, that's where we'd expect it to stall. So you see it comes back into here, beautiful little daily reversal, then Polos comes in to save the day, and we get that puke. We'll have to see how we open tonight. We still expect that something really drastic has to happen for this to trade back below this zone. So you're probably going to see a lot of buyers wanting to come back in at the 131, 130 to continue this move higher. We think this was the quick part of the move. It could clearly accelerate, but we'd be flat on primary shorts. Anything more is gravy. But again, it'll be interesting to see if this pullback continues or if we get that breakdown. You'll have to see that dollar really move to mid for this to break completely down. Now again, if you like these videos, you like more detail on the specific currency pairs and stuff, check out the latest YouTube videos we posted just before this over the weekend, so that could be of interest to you. But again, going into this week, there are a lot of interesting charts. Keep an eye on EEM, keep an eye on JNK, keep an eye on the financials. So there are a lot of interesting things trying to play out. It should be an interesting week. I think what could probably confuse most people is how the dollar is going to react. We think that that's possibly the hardest call and maybe the least interesting one. We think equities and gold are far more interesting. And again, I'll try and post a lot more charts on the Twitter feed throughout the week. Have an awesome one. Thank you so much for liking. Thank you for sharing. And talk to you guys soon. Take care. Bye-bye.